on our show. MCX is the management we are going to speak with, and that's because we are seeing some sharp decline in gold prices. They have softened over the last few months. And after a recent meet with the MCX management, Motilal Oswal Securities note highlights that demonetization, GST and all these have actually cut bullion volumes to nearly half in a span of a year. Though, of course, encouraging trends are seen in other products like base metals. Mrugank Paranjape, Managing Director and CEO of MCX, joins us now. Mr. Paranjape, good morning. Thank you very much for joining us. Well, let me start with the daily turnover number itself. If we looked at the 9-month FY18 turnover, it's 20,000 crores. The year-on-year fall is about 14%. Even if you look at H1, 6 months, again the fall is 18%. Are things likely to get worse before they get better?
So I think the good news is that the things are already better. We have seen a very, very good positive increase in the volumes. The 45-50 days of trading that we have seen in this quarter, the volumes are already up about 16% as compared to the previous quarter. So all the decrease that you just highlighted just now seems to have gone away. We clearly see this as a result of both base price effect, but also a fairly good increase in terms of the participation that we are seeing across all our products. And I think that's a very, very encouraging sign for us, because coming on the back of, like you said, the first 9 months, which was slightly dull, this has been a very, very encouraging turnaround in the last 45 days for us.
Sir, but this 7, 8 weeks that you're talking about in 2018 actually compares to a very low base, which is why I took 9 months. I didn't take just quarter on quarter. So, after all, from that kind of a base, the post-demonetization base, you would say, if you can give us a quarter on quarter, are you seeing an encouraging sign?
Exactly, like I mentioned, this is something where we are seeing the numbers come back to almost the pre-demonetization levels now. So the numbers that we've been doing in February are very close to our pre-demon numbers, and that is very encouraging for us. That's the reason I said things seem to be already looking back.
So you spoke about volumes growing 16% in this quarter, Mrugank. Can you just break that up for us in terms of how the bullion volumes have looked and what is happening with respect to base metal volumes? Because base metal volumes were fine, but it was bullion where the real problem lay, right?
Yeah, so if you just look at our volume numbers over the last 1 full year or maybe slightly longer period, and demonetization day was probably the day when things changed. We used to clock about 9,800 crores on bullion pre-demonetization. That number throughout 2017 was roughly in the range of 5,000 crores. And that number has probably picked up by about 1,000 crores in these last 45 days. However, we have a very good mix where we have energy, we have base metals, and these two segments have done very well for us. So if you take away the bullion effect, actually even in the last 12-15 months, we have not only done very well, we've probably done better than the base price effect as well as the volatility effect. So participation in both these sectors has been very good for us. And that's really what's changed the composition. So we are today about 40% now base metals, whereas pre-demonetization we used to be 40% bullion. So I think that's the big change we have seen in our composition of volumes. Energy continues to remain at around 30% of our volumes today.
Okay. Mr. Paranjape, there have been some salutary announcements on the regulatory front. SEBI has allowed options, participation by alternate investment funds, AIFs, bank subsidiaries being allowed to distribute commodity products. What can you, if you can crystal ball gaze for the first quarter of next year, how much can these incrementally mean?
So I think a lot of these are long-term impact, and I will just take a couple of them to illustrate why I say so. When we talk of bank distribution, we all know that the bank subsidiaries form a very big chunk, maybe about 30 to 40% of the market when it comes to the equity markets. Now, a great step by the regulators in allowing them to distribute commodity derivatives. But there is a lead time. A large bank distributor, which we onboarded as a member in January, would take a couple of months to integrate their back office, front office systems. We've got to train their top 100 branches in selling commodity derivative products. And to us, therefore, in terms of the bank distribution really coming in as a positive inflow into the volumes will be a Q2 next financial year phenomena.
Okay.
The same way, I think, when we talk of institutions, it is a long-term thing. It is something which will impact and benefit us in the long term. But in the short run, we've seen only a couple of AIFs come through. One of the reasons was that this also needs a change in the custodial regulation and getting custodians on board. And that is something which we expect to happen in line with when the changes on mutual fund and PMS sector happen. So again, in terms of volume related uptick coming from institutions, it's probably something which is in the second half of next year.
Okay, you're also seeking a permission for a liquidity enhancement scheme as far as trading of options is concerned. By when do we expect that to come through? And particularly on trading of options, how much do you think your revenues could grow? I mean, there's some talks of it going up by about 15 to 20%. Is that something that we can expect?
Yeah, so I think we would like to just give a little bit more flavor on why we come to that number and why we've been saying that number as well. So if you look at the ratio of options to futures turnover, and if you look at this ratio in the most developed markets internationally, that number is at 20%, and that is a very low benchmark. Now, if you look at India, of course, the equity indices have a very high number, but that's not comparable because they are a very different animal. I think the comparable number that we sort of looked at was single stock futures and single stock options, where we believe that on a notional basis, the options to futures turnover is in the range of 75 to 100%. So our view is that in a 2 to 3 year horizon, when really the market matures, you should see the options to futures turnover ratio, even in commodities, reach that 75 to 100% number. Now, if you extrapolate this with the fact that in options you charge for the premium and not for the notional, but the charge itself is slightly higher, we believe that translates to a roughly 15 to 20% growth in our revenues over the next 2 to 3 year period. Now, to achieve that, we believe you need a couple of things. You need all the products available, because today you have only one product available, so it's a question of also share of mind with the traders, and which is why we are in the process. We have applied to SEBI for more products. We are hoping to get at least 2 more approvals by the end of the financial year. And then when it comes to getting some more of, as one would say, a little bit of a lively trading screen available, because the retail is really looking for that. We are hoping that we will get the approvals for the LES within the next 45 days as well. Okay. So you should see LES launch somewhere around that time, as well as the fact that we will get at least 2 more options contracts approved, which we will try and launch by April this year.
This final question. Now that others like NSE and BSE can launch commodity exchanges, how do you see the future shaping up? Loss of market share possible?
So I think at MCX we are fairly confident that we should not lose market share. In fact, we are working towards making sure that we retain every bit of the market share we have and consolidate more in this space. We are making preparations for the fact that the regulators are preparing for spot exchanges in various commodities, and we will consolidate our overall commodities presence to that. But we absolutely have no doubt that with the long-term contracts that we have, with the engagement that we have with the physical market, and with the depth of liquidity that we have today, there should be no reason for us to lose market share, even if others come in some time.
Okay, Mrugank, the market is discussing that. Is there a possibility of, say, a merger between MCX and say BSE? I mean, to take on NSE, because now you have cross branding. Of course, one exchange can give both equity and commodity. So is that a possibility?
So I think any corporate mergers is you can never say whether it's a possibility or yes or no, because that's more for the shareholders, for everybody to decide together. All I can say is that there's nothing that is being discussed today. But theoretically, these possibilities.
But you're not
always
you're not
exist.
denying that there is a possibility. It could be a win-win, right? I mean, because NSE is a dominant exchange, and we have BSE and MCX both have technology, both have reach, and now that you have cross-branding and one exchange offering all the products, so it could be a possibility.
So our view is that when it comes to the whole issue about one exchange offering everything or something being offered on the same platform, that is already enabled. Today when a broker is a member of multiple exchanges, for the end client he is offering margin fungibility, for the end client he is offering everything on the same screen. So a lot of that is already achieved.
Okay.
So I think we all have to see really what will be the benefit, if at all, by any consolidation. And before that is really understood, I think it will be too early to comment on whether consolidation will happen.
Okay, you have given some answer to my question. Thanks a lot, Mrugank, for your time. That's MCX. So obviously not denying it. By the way, just want to point out that there's a bit of a
Picked
rally.
up in the market.
Yeah, especially in the mid-cap space. And the stock that I just want to point out is Sun TV, because had a big fall, and now there's a big rally which is happening on Sun TV. So that stock is at the high point right now.